Mehta is director at Elixir Equities. Dipan, good to have you with us here on the program, and apologies to have kept you waiting. We were speaking with the management of Aurobindo, if you heard that conversation. I have two questions for you, Dipan. One is this slight shift, which one is hearing more and more, that maybe consumer names will do better, and names like, of course, there's the quick commerce like Zomato, etc., which comes up, Trend, or maybe even Avenue Supermarts, which has been doing well lately. Do you believe that thesis? That there's money to be made here, that the sector has underperformed quite a bit. And the second one is pharma. But actually, my question is, it's almost as if, because there's this overhang of tariffs on pharma, people are buying hospitals. It's sharp, of course, different businesses, but hospitals have done phenomenally well. So just wanted your thoughts there, pharma versus hospitals. But start with consumer names.
Yeah, Prashant, good morning and thank you for having me on your show. I think that we're very positive on all consumer-oriented stocks, excluding FMCG. And we've spoken about the segments. I think Alcobev is one segment. You covered it very well. I think Nigel's on the show. So that's one sector we're very positive on, very good growth volumes over there. Indian Alcobev companies, I think, are in a sweet spot. They can grow pretty well, create value next 2-3 years or so. And then within the other consumption-oriented themes, I thought retail, especially jewelry, did very well in this particular quarter, and the scope for improvement over there also is great. I think even at high gold prices, demand remains strong, and we're expecting a bumper festive and wedding season, so that should boost sales for them. And still, I think hotels, hospitality, and aviation still continue to do pretty well. So I think that we're very positive on consumer-oriented names, and no doubt, I think quick commerce and other stocks, they're still making losses. So that kind of, you have to have a longer term view to really benefit from that. But nonetheless, I think they're great stocks to own.
Give us some names in hotels, Dipan. What do you like out there? Because the big leaders, Indian hotels, valuations aside, Street wants to pay more for it. It's seen those bouts of correction of 10-15%, but yet the Street bids it up. And yesterday, in fact, I explained one stock for educational purposes, Taj GVK as well, which has been a rank underperformer. And potentially you'll have Indian hotels that has a holding out there. We'll have to see what they want to do next with it. Tell us more.
Usual disclosure, Nigel, the dark horse over here could be Lemon Tree.
Lemon Tree.
I'll tell you why. I think because it's in that particular sweet spot where it caters to business travelers, holiday travelers, as well as, all other types of villages and related travel. And they're in tier 2, tier 3, expanding very quickly over there. Great expansion plans, as good as Indian Hotel, if not better, and really focused on management contracts, which can generate revenues at extremely low capital employment. That's a well-managed company, reasonable valuations. So I think that it may not be the best hotel company. Of course, Indian Hotels is that. It may turn out to be the good investment on a longer term basis. Having said that, it's a company in which we and our clients are interested, and we'll be looking at buying into that stock.
Just to go back to the alcohol beverage space, our colleague Yash reported yesterday, and we'll pull the graphics up, Sula, which has basically just gone south, right, one way, and a lot of hopefuls. I mean, that wine penetration story is not played out, at least not yet. But Sula is looking at some of the harder stuff, entering diversification into whiskey, vodka, etc., by doing some acquisitions. That was a story we put out yesterday. Any thoughts here, Dipan?
No, I don't think so. I think, you need to have solid track record in terms of managing the environment, because at the end of the day, the alcohol industry is a very regional-oriented industry. One needs to understand the kind of regulations, the pricing, distribution at the local level, manage the regulation over there. And I don't think Sula has been so successful. The track record has not been that great. I mean, look at what Radico Khaitan has done, or what Tilak Nagar has done, or what Allied Blenders has done. I feel more confident in those companies than Sula Wines. And I find it very surprising because I thought wine consumption is doing pretty well. They're one of the largest vineyards in the world, if I may say. That's what they say so. And yet I think the performance is not coming through. So a bit perplexed about that, but we always remain hopeful. But for the time being, I'd give Sula a pass.
Dipan, actually, the data is pretty stark here in terms of the, it looks like, it would have done very well. But wine sales, wine as a category, has grown at low single digits CAGR over the last 3 years. That's the basic problem. But look at premium prestige brands, 15% growth last 3 years. Premium luxury brands, which is that elite segment, that's grown at 30%. So the category essentially seems to be a bit of a problem here. And I guess that's the reason why a company
I
like
can say,
Sula is looking
Prashant,
at
all I can say, Prashant, at the parties we go to, I see more and more women holding wine glasses.
wine.
Never before. So
That's actually true.
that's my empirical
You're right.
research, so to speak.
No, absolutely.
Dipan is still with us. Dipan, hi. We were just discussing the prospects of this large acquisition with the management of Aurobindo. I don't know if you caught that conversation or not. So it's very clear that they're interested, but they don't know which way those talks will go. If this indeed turns out to be a big acquisition, somewhere in the vicinity of $5 billion, is it going to be a negative?
Yeah, I would think so, Surbi. I think that the street will not take it positively because the company will take on debt at a time when its core US business may be under threat. Any form of tariff on pharmaceutical exports is going to impact Indian pharma industry, and that may impact cash flows and overall balance sheet quality. So, and I think 5 billion is a bit too much for a company of Aurobindo's size. Maybe better options for the company, but per se, I think entire pharma industry needs to be a bit careful because these tariffs have really not played up to market's expectation. There was a time when we thought we get a really favorable deal, and now we're amongst the least favored countries. So I don't know what can happen in pharma as well. So I just want to, stay away from the sector for the time being, and then see how this particular threat evolves, and then maybe make a more, I would say, knowledgeable call.
All right, Dipan, I wanted your view actually on India Cements. I remember post the con call that Ultratech did, and everyone was talking about this line, right? That South is going to be the new North. So everyone was dissecting it, wondering how to play it. There was this one analyst who said, Nigel, the bride is ready. There will be an OFS that will come about. And, that comes to mind because Ultratech Cement, they're the best in class, in terms of capacity addition and turning around some of these acquisitions that they've done as well. And they've done that with India Cements. But now to meet that, the norm of bringing the promoter holding down to 75%, they're coming in there and doing an OFS and offering no discount actually. What's your view on this name? Because as of now, they barely broke even EBITDA-wise after many quarters. Market capitalizations around 11,000 crores with around 1,000 crores of debt. So you put it together, valuations don't justify it. But if they can do 1,000 rupees per ton of EBITDA in the next few years, as they promised, with maybe 10 million tons, then you're talking about it being valued at around 10 to around 11 times EV upon EBITDA. So your view on India Cements?
Actually, I just go with Ultratech because eventually it's going to get merged, as they have done with all their companies. So this is just a matter of, trying to meet a particular regulatory requirement. And no doubt they will turn it around, and it's a great acquisition and helps consolidating the industry. And that cement has been doing pretty well. Last quarter numbers are very impressive for the cement companies. And I think this particular quarter, September, may be a weak one because of seasonal factors. But we're looking for a very strong season for cement as well. So positive on the cement industry still. But I would say let's go with Ultratech itself than India Cement.
Okay, so that's on the cement pack. Yesterday, Dipan, this move in Protean, that was noticed by a lot of people, right? Because after the big debacle, losing out on that very, very prestigious PAN 2.0 project, the stock had fallen off a cliff. And then this move came in yesterday. What are your thoughts? A lot of people would have still, been in Protean and they perhaps did not cash out or sell out when this unfavorable news came. What would your recommendation be now?
Well, I think there's a great deal of uncertainty, and if something positive has happened, which we may have missed it by the stock rallied 15%, one needs to really see it. But it's not exactly a very cheap stock also. And this particular development is certainly not positive. So I would say that maybe there are better options within the platform space than maybe a Protean.
Okay, all right. Thanks a lot, Dipan, for joining in, giving us your view on a whole host of stocks. Wishing you a good Thursday, and we'll chat up with you rather soon.